I think the easy access to capital was a fantastic situation for us, which would not have been replicated just by private equity. And so I send a message to the market saying, please find the way you used to do things and those animal spirits and that confidence, and return the London markets to the glory that they used to be.
Hello, you're watching Proactive. Joining me is Learning Technologies Group Chief Executive Jonathan Satchell. Jonathan, very good to speak with you this morning. The company's been given a green light to proceed with its acquisition by General Atlantic. Tell us why, after your very strong growth story over the past 8 years, you're now going private.
Morning, Stephen. Yes, indeed. So the business has been on the market since November 2013, and for those first 8 years, it was a pretty incredible growth tear that we enjoyed. And clearly, a lot of that was done through acquisition and some organic growth. I can only describe the feeling that I have as very mixed emotions, because we were so very well supported by investors on the market through 6 equity placings, always oversubscribed, always very enthusiastic about what we were doing in those first 8 years. And so it seems strange that we're now leaving that market after 3 rather more difficult years, where the environment just felt like it changed completely. I appreciate that the world changed. We went through a great deal of macroeconomic difficulty, interest rate changes, of course, and our own business performance issues. Although they were never particularly difficult, but we just went ex growth. But we still managed to fully deleverage from a 1.8 times leverage at the end of 2021 to 0 times leverage now. So we were very profitable, generated a lot of cash, but the market seemed to fall out of love with us, and unfortunately, with the very severe share price decline that ensued, that caused a big invitation being sent out of the door to America to private equity to come and have a look at us. And I think that's a shame, and it's a sad indictment of the situation that we find for companies on London markets at the moment. And it's not something I would have chosen to do. It's a situation I feel we've been sort of slightly backed into.
So this isn't a situation then that's unique to Learning Technologies Group, Jonathan.
No, well, I mean, you look at the stats of the number of businesses that are leaving the market. It's quite extraordinary, actually, the numbers. And so no, it's not unique to us at all. But I do think we were perhaps one of the rather more unusual types of company, in that, of course, we were a buy and build story. We were therefore very open about our need to use the markets to raise capital. As I say, we did that 6 times very successfully. And I pay a great deal of compliment to the markets for what it helped us to achieve. Perhaps the stat that stands out most is that we took profits from day one of floating the business, about £1.5 million, to around about £100 million in 2023, and 2022 and 23, in fact. And so that's about a 70 times increase in the amount of EBIT the business was making, when we actually only increased the share count from 250 odd million shares to 790 million shares, about a 3.25 times dilution. So if you look at those sorts of ratios, it was an incredible success story. And we're thrilled about what was achieved, but it seems that the markets decided that it wasn't for them going forwards.
Jonathan, you said mixed emotions, and yet directors of Learning Technologies have recommended this bid to shareholders, who then voted for it. Why is this a good deal for shareholders, Jonathan?
So what we need to remember is that our share price was languishing in the sort of 70 to 80p range for many, many months, or a year or so, prior to this bid coming in. So the bid was at a very substantial premium to the share price. And when the directors took independent advice from Goldman Sachs and Numis and others, it was very clear that the concept of getting the business back up to £800 million worth of market cap, i.e. equivalent to £1 share price, was not something that we felt was going to happen easily. And when you actually look at the total value of the business and the rating that it was on, it was deemed to be a very appropriate valuation based on all sorts of different metrics, discounted cash flow analysis and cost of capital and so on. I was not directly involved in that, nor was Andrew Brady, our chairman, because we were considered to be conflicted, which is fair enough, because we were electing to roll over into the new private company, something, of course, which every other shareholder, if their fund mandate allowed them to, could do. So we were all invited to do the same thing equally. And therefore, we weren't involved in those valuation decisions. But our independent committee of the board, which was every member of the board except Andrew and I, deemed that they were appropriate. And by the way, I do agree with them. I think it was a fair valuation.
Uh, Jonathan, can you tell us a little bit more about General Atlantic and their plans for learning technologies going forward?
Yeah, absolutely. So they are a very well-known American private equity fund. This is actually the Atlantic Park, which is their structured debt fund, which is part of General Atlantic. Where they're particularly keen and interested in us is the diversity of the group of assets that we have. At first, there is going to be substantial risk on the business because a lot of debt is being used to finance the acquisition of the shares. The business, of course, is very profitable and cash generative. But over time, I'm sure a number of divestitures will be made to start to pay down the debt. And they have a lot of expertise in new technologies. They've got a big span of investments across the world, but particularly focused in America. And where I'm particularly keen to derive from their expertise is not only on AI and what they're doing in some of their other businesses in their portfolio, but also on their whole angle with North America. We are 70% a North American business, and they have a particular understanding of that market, which I think we can benefit from.
And Jonathan, you said US now makes up about 70% of the business. How is it going to be affected under new policies implemented by US President Donald Trump?
Yes, indeed. Firstly, I'd say that I think economically, the US is going to get stronger and accelerate even further with some of the policies that he's implementing. And clearly, I've just come back from there yesterday, and there is a lot of positivity around what his effect is going to be on the economy. So the animal spirits are alive and kicking in the US. He is, of course, making some profound changes, some of which are less popular than others. And he's obviously really targeted the whole diversity, equity, and inclusion agenda. Um, we had been seeing a trend of a reduction in the amount of DE&I training we were delivering to customers anyway across the last couple of years, and it's not a big volume of what we do, but we do have a business, a specialist business in terms of affirmative action planning, and he's issued an executive order that's actually rescinded and revoked that. That business is about a $20 million revenue business and is significantly impacted by that. Interestingly, we're watching those customers consider what they're going to do next, and although there will now be no mandated requirement to file their diversity statistics, they still have other requirements to file data and confirm that they are not operating any anti-discriminatory policies. So in doing so, we believe that some of our customers will still require the data set that we collect for them. So it's a watching brief, but definitely that business is negatively impacted by what he's done.
Jonathan, now that you've received all clearances for the acquisition, what's the timetable? What comes next?
Sure. So we're in a bit of a twilight zone because you then need to go and get the court to sanction the scheme of arrangement, and then you can go through the completion mechanics. And doing that by the end of February would have been possible but challenging, and there are a number of things that we need to get done in place to achieve that. And so we are going for a completion at the end of March. So Monday the 31st of March will be the final completion date, and if you come back about a week before that, everything starts to happen from there. I believe the court date is the 24th of March. So end of March, sadly, we will leave the market for good. And as I said to you at the beginning of this call, it's with mixed emotions. The public markets have been exceptionally supportive for LTG on its first 8 years of its journey. It's been a torrid and difficult time for the last 3 years. We haven't performed as we should have done, and therefore, of course, so the market's going to react accordingly. But there's something else going on in those markets, and I pray and hope that the animal spirits return to the market, because it matters to London and it matters to growth companies like us. I do not think we would have flourished under private equity as well as we did under the public markets capability in the first 8 years. I think the easy access to capital was a fantastic situation for us, which would not have been replicated just by private equity. And so I send a message to the market saying, please find the way you used to do things and those animal spirits and that confidence, and return the London markets to the glory that they used to be.
Let's hope those animal spirits are listening, Jonathan, and I hope you'll keep us updated on the journey as you become a private company.
Indeed. Good to see you, Stephen. Thanks so much.
And you, that's Jonathan Satchell, Chief Executive of Learning Technologies Group.